Good day, everybody. It's Greg Schnell, and I am here with your Daily 5. So the first chart I want to cover off today talks a little bit about the S&P 500 earnings currently versus where they might historically track. So this blue line is the current earnings level. Multiplied out, we're at around 24 times or something like that. And then, 40 times. And again, that's based on historical. So even if this jumped up a bit, but what we can see clearly is we have traveled above this range for almost 3 years now already. We've been spending quite a bit of time up here. Back in 2007, we can also see that this started to rise up to a relatively high level. And then we had a kind of a final surge in earnings, and then it rolled over. So we're looking at this chart, or this chart to me just says we're extremely stretched here, and it's worth paying attention to. And so the one thing that I'd like to communicate today is some of the charts that are pointing out how that stretch is. And one of the, I'll share a couple of charts that I share with my subscribers to give you an idea of the kind of, I think, value that we provide to help them manage their portfolios and at least be aware that a larger downturn might be coming. So here's the S&P 500 recently. This goes back to 2016 into 2020. And what we see is, this is still very much an uptrend. Here we have the RSI, and it's been making lower highs since 2018. So the one thing, at least let's be aware of that, and perhaps it's still going to blow through that. We don't know. It's relatively recent, this pull down, and this is a weekly chart. Down at the bottom, I have the momentum indicator, and what is that trying to tell us? Well, you can see that this PPO momentum reading is up around 4%, and that's one of the highest readings on this chart. So with that sort of backdrop, you can see that we've rolled over with a lot less momentum, and these big momentum peaks can mark major tops. Now, the other side of it is they could be like it was in August, September, and then just pull back a bit and then make a final run. I want to point out that right now on the S&P 500, we've actually made a higher high on the second wave. Back here in 2020, we made a higher high on the second wave, but many times we make a lower high. And as we roll forward, I think what's the most important part about this chart to understand is we already had a momentum peak at a really high level, 3.5%, and now we're up here at 4%, and now we're in my work we're rolling over. So what I want to be aware of is how high this is and how hard it could fall. Now in 2018. I think it knocked 10 or 15% off the index over the next couple of months. So it fell quickly, rallied, and then fell again. And then we finally got into a rally mode, and then we dropped 20% in the latter half of 2020. So my goal today is to try and show this market from a historical perspective and make sure that we're all aware of just how high the momentum is. So on the next chart, this is the S&P 500. Up at the top, I've got the relative strength index going back. This is 1996 over here on the left, so 25 years. And we can see 4 meaningful downtrends in momentum, and we currently have one setting up that is still at a very high level. We're up around 65, and when we look in here, the market was closer to 60 before it rolled over. Back in 2007, we rolled over, up around this same level that we're currently at. And back in 2000, we had a continuing downtrend for multiple years, actually. It took a few years to wear out. We've been going down here for 3 years. But what we need to be aware of is, the uptrend is currently in place. That's still pretty big. We have an uptrend here, and then this rollover again. It was meaningful. It caught our attention. And then this was a 20%. This was a 35% pullback. And if we just run the trend line all the way through here, I think the big thing to be thinking about is how far we are away above it. And we've seen that in that first slide. how we get really far away from what the actual underlying economy is, and then we snap back. When we look at the PPO momentum wave, what we see is it doesn't chart like the RSI, which I like. It actually gives you a different view. But because I'm not using the MACD, I'm using the PPO, the percentage price oscillator, I can compare this over long periods of time, even though the price level was much different. So back in 1996, we had an S&P 500 level around 600, and we're currently up around 3,800. And so with those different price levels, a MACD would make a much higher wave the higher the price goes. With the PPO, percentage price oscillator, we can compare that over time. But the point I want to make is we just came off one of the highest levels in 20 years. So we go all the way back into 1998 was the last time we got up to this height, and both in 1999, where we kind of ran up and then stalled, and in 2009, here we were just coming off the bottom of the rally, and we ran up and we stalled for a few months going sideways, had one more final rally, and then fell down. So we don't know how it's going to work out. We just know that we're at an extremely high level. In 2004, it rolled over right away and then did nothing for almost 9 months. So a little bit tricky to kind of identify. When you take this same chart and look at it over a long period of time, like 100 years, what you'll see is that we're at one of the most severe levels in 100 years, probably 10 times since 1930s that we've been at this level. So pretty heady market conditions, and we just need to be aware of that because we don't want to give up all the profits that we've made. So here's the Nasdaq 100 going back to 1986. And what we see here is the push up in September was one of the highest spikes we've seen in history. In 1995, it ran up here and then did nothing for 6 months. In 1991, it ran up here and did nothing for a few months after. And in 1986, it kind of ran up just at the start of the Nasdaq and rolled over quite quickly. The two major peaks that we see, on the one peak in 1999, it still trended higher. The market was very, very frothy, still trended higher. And then when we got to the actual peak, when it rolled over, that was kind of a pretty good place to be aware of the potential. Now, this is a pretty crazy peak. But the point I want to make is this has been running quite a while. So be careful if we're starting to make a lower high. When we did this on the Nasdaq, it came way down to this level and then fell away. So what I've shown here is my Schnell Strength Index, and a couple of things to remember. First of all, in mid 2019, the market pulled back and really didn't do much, and that's what my indicator was saying. And then it ran up. And when it falls below this 75 level, I kind of want to be careful. And sure enough, the market pulled back. When it's trending higher, that's good. So we ran all the way up. Gave us an early signal in 2020. And then the market kind of continued to go higher, but we kept making lower highs in my indicator. And over here, it's add protection on lower lows. Well, so you were starting to protect in here. It ended up rolling over, and this was a very clear signal, and we stayed down in this lower level for a month. What we have now is the lowest level going back to last August. Last April, and the same sort of level that we saw in 2019 in the August timeframe. So these are meaningful clues. We've broken the uptrend here, but this has been weakening for a while. And, into early 2019, it looked like it was going to work out just fine. Then we had a 1-week rally. And since then, the indicator's been letting go. And now, as of Wednesday night, sitting here at 20%, clearly a very weak indicator. So the last chart I want to show you is I actually have 3 of these different Schnell Strength Indexes. And one of them is a quick indicator, a fast indicator, and then the one I call for the highs. But the main point I want to make here is the quick indicator has been down here since late December, telling us to be cautious. We don't really consider a sell signal until we start to, or a lighten up signal, until this starts to fall below 75. And then we just want to make sure either not on margin or trying to protect positions, that kind of thing. And then lastly, the fast indicator. This is a really good swing trading bias for those that are a little quicker. But the point I want to make is they're all not only below 50, they're below 25. And when they were down here back in early 2000, that was a big problem. They could come down here for a couple of weeks and then we get a nice rally, and that's the kind of clue we're waiting for. But in the meantime, it's really given us a sell signal, so something to watch out for. So if you're interested in learning more about the Schnell Strength Indexes and other tools we've got, these are all the things we offer on the website for our subscribers. There's now 2 of us working together at gregschnell.com to try and give you more information, trade setups every day. And right now, using the gregschnell.com/daily5, that'll save you $550 a year. So if you're interested, take a look at that. And thanks for watching my version of the Daily 5. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.